Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome for a second time a medical doctor with a deep understanding of crypto uh, from Canada, but talking to us today from Costa Rica, Dr. Daniel Daniel. Daniel, welcome to the show.
Thank you. Thank you, Ashutosh. Thanks for having me back.
Thank you. Daniel is the founder of the crypto investing program and owner of the EMC Dental Incorporated. He has developed the bull run method, which is his own advanced strategy that he uses to successfully invest himself. So, Daniel, we had a very interesting discussion last time about your journey and why you chose to be in crypto. Today I'm going to speak only about crypto to you. So my first question is, tell me about the bull run method that you have created and how does it differ from other crypto strategies?
Absolutely. The unique thing about crypto is this. If you ask five people in crypto how to make money in crypto, you might get 50 different answers. So
Right.
it's a very horizontally, it's very wide berth. So when I got into crypto, I dipped my toes into many different things. One of the things I realized is mostly everything in crypto requires an incredible amount of time,
Mm,
attention, education, studying. It's just not built for the average professional. The average
right.
professional, like myself as a dentist, and my friends who are dentists, doctors, all the
Mm,
professionals, school teachers included, anybody who's got a full-time job, tradespeople that doesn't have the energy after working 8, 10, 12 hours a day to spend 3, 4, 5 hours a night trying to learn something new. It just didn't make sense. So when I got into it, I did discover this one sort of pathway that made a lot of sense for me personally, but also made also sense from an investment standpoint. I call it the
mm,
bull run method. And what the bull run method really is, if you look at the stock market, because most people are familiar with the stock market but aren't familiar with crypto,
mm,
there are an incredible amount of parallels. So
mm.
what I'll do is I'll give you the brief, sort of the very, very brief
Yep,
parallel. So in
please.
the stock market, if the stock market crashed last night, I'm going to talk the American stock market because I'm more familiar with the American stock market.
Mm,
So
mm,
if the stock market crashed last night, and then we were to invest today, you and I, in that market, well, right away I'd say, okay, the
mm,
stock market crashed. I'm going to get some Apple, right?
mm,
I love Apple products. I'm a huge Apple products. I would definitely invest in Tesla.
mhm.
Tesla, because Elon Musk and Donald Trump are now best friends, and
Yep.
that's fantastic.
Mm,
Google, Meta, all Nvidia, these big projects. So what we would do, we would buy them now because they values went down, and we would wait. 1, 2, 3, 4, 5 years later, the values would go up, and the difference between where we bought them and where we sold them would be our profit. Does
mm.
that make sense?
Correct.
And for your listeners who aren't familiar with the stock market, if I was going to buy Apple, I'd go to the stock market and I'd look for a ticker. A ticker is a series of
Yeah.
letters that represents the project in the stock market. For
Mm,
instance, AAPL is
mm,
Apple, TSLA is Tesla.
mm.
Very, very simple. Well, it's no different in crypto.
Okay.
When people invest with me in crypto, I want them to forget all the names and just look at the letters. So BTC, XRP, ADA, LTC, they're just tickers just like they are in the stock market. And these tickers represent a project in crypto, and that's all they need to know. Now, using that, we also need to understand, okay, what is the rhythm of what is the rhythm of crypto? Because in the stock market, if it crashes, everything goes down, and we
Mm,
know it's going to recover. It's very simple to time after a crash. Crashes don't happen often.
mm,
In crypto, there's a rhythm to crypto. About
mhm,
every 4 years,
mm,
okay, there's an event called a bull run. And a bull run was where an incredible amount of money goes into the crypto market and the values go up astronomically in a very short amount of time. Generally speaking, a bull run can last anywhere between 6 to 18 months. This bull run that has just started is likely to finish within 2025.
mhm,
So it's not going to be a very prolonged bull run based on what the experts tell us. So what we do in crypto in the bull run method is we want to invest right now before and as the bull run begins when projects are low to
mm,
get all of our money in. And then when they explode up, we're going to sell, and the difference between where we buy and where we sell is going to be our profit, but it's going to be different than the stock market. The time is condensed. Instead of
mm,
waiting 2, 3, 4, 5 years for it to recover, it's all happening this year. And
mm,
instead of talking, 1 or 2x, the multiples sometimes are 5x, 10x, and more. It's very, very, very fast. Second question, people go, okay, I understand the timing. The bull run has started. I want to get in. In the stock market, it's easy to know what to buy. I use Apple products. I use Google. I use Tesla. What do I buy in the crypto market? Well, what I do in my program is I've curated a list of assets that have been vetted by independent experts
Mm,
that are doing incredibly well since this past summer and the previous summer. So this
mm,
is what I call the golden list. So I give all my clients what I call the golden list, which is about 20, 25 assets that have been all independently vetted by experts who do incredibly well, and they perform very well. So for instance, people who join my program in October, already their whole portfolio is up 2 to 3x, and we
mhm.
haven't even started.
Yeah.
So 2 to 3x. So if they have, 50,000, their initial investment, they're usually between 100 and 150,000, and we
Mm,
haven't started yet. That's just warming up before the violent explosion, which is
mm,
coming this year,
mm.
violent in a very positive
Yeah.
description
Mm.
financially. So that, in essence, is the bull run method.
Fascinating.
Like I said, yeah, with the golden list, I encourage all my clients to do their own research. I help them understand how to research, but I also say, do not dare to follow what I do or buy everything on the list. Pick
Mm.
3 or 5 or
Correct.
7 assets, something manageable, and then they follow them. And they only need, after they're set up, 10 minutes a day at night. They go online, they open up their exchanges, they look at the values. Oh, do I want to buy a little bit? It dipped, and then they wait, and that's it. And
Mm.
then in a few months, when things go up exponentially, then they're going to start to dollar cost average out. So I teach different strategies around the whole thing, but
Fascinating.
in essence, it's exactly like the stock market. Everything is low. We want to buy low. We want it to go high. We want to sell high. And then afterwards, we're done.
Amazing. Thank you. That was a great response and a great explanation. Daniel,
It was fast.
can you also tell me a little bit about the difference between a centralized and a decentralized exchange for beginners?
Absolutely. Yes, it's a world of difference. So even Bitcoin itself, the concept of I'll just cover the concept of decentralization versus centralization
Mm,
because it applies exactly to those exchanges. But the
mm,
concept of decentralization versus centralization was the whole inception of Bitcoin. So when
mm,
Bitcoin was released January of 2009, the whole reason behind it was somebody wanted to create a decentralized financial system, not even a system, a decentralized fiat or
mm,
decentralized currency, I should say. I apologize. A decentralized currency. The challenge is in our countries, every currency is centralized, which means it's controlled by the government and by the banks. The
mm,
issue is this: in a centralized system, things can go wrong because centralized means it's one entity, whether it's a person, a company, a government, one entity controls it. Decentralized means no one person controls it. A
mm,
decentralized system, it's a community system where nobody can manipulate it, nobody can control it if done properly. So
mm,
the problem with a centralized system is if something goes wrong
mm,
and you're a part of the system, you have no recourse.
mm,
For instance, there are countries around this earth where the government and the banks have coerced and taken everyone's money with them.
mm,
So if your family had their life savings in the bank and the
mm,
bank and the government shut down or the bank shut down, your money's gone and you have no recourse to
mm,
access it. That is defeated in a decentralized system. They can't do that because it's community based. Nobody has the control over it. In
mm,
my own country of Canada, where I'm from, where I was born, raised, and I live, during the trucker strike a few years ago, our ex-prime minister
mm.
decided anybody who supported these truckers. So, for instance, there's a trucker strike, and
Yeah.
Canadians are very empathetic. So, whether you're a relative or not, it was just I heard about them. If you heard about them, say I'm going to send them $20 to support
Mm,
because they're all striking
yeah.
and we want to rally together. Our prime minister chose to freeze the bank accounts of every Canadian citizen that supported the truckers and lock you out. You can't access your own money. You can't
Wow.
access your visa. It's
Mm,
insane. And that's the vulnerability of a centralized system. So when it
Right.
comes to
Yep.
crypto, a
Hmm.
centralized exchange versus a decentralized exchange, I'm going to zero in and answer your question.
Well
A
said.
centralized exchange
Hmm.
is like a crypto bank account.
Hmm.
It's all it is. It's a crypto bank account. So you go online, you open up an account on a centralized exchange. It's like open up on a bank account. You got to show your ID, give them all your information, and they kind of evaluate it and they give you an account. You
Hmm.
move money onto the account and then you buy crypto from that account. It's very easy to use.
Yep.
It's like
Yep. Yep.
using your bank account to buy stocks.
Well said.
The problem with it, it's centralized. And in the
Hmm.
past in crypto, before there were regulations and before people were aware of all the possibilities of things that can
Hmm.
go wrong,
Hmm.
the owners of those centralized exchanges, whether intentionally or unintentionally, lost everyone's money.
Hmm.
Many problems. People lost hundreds and hundreds and hundreds of millions of dollars when centralized exchanges went
Yeah.
under. A
Absolutely.
decentralized exchange is different. If there's no account, you're not moving money, there's no account. You literally interact with it. A decentralized exchange, you know what is the exact analogy for it? If you're at the airport and you see one of those kiosks where you exchange money, that's what a decentralized exchange
Right.
is like. You
Right.
have something called your hot wallet,
Hmm.
right? Which is a virtual wallet. And then you connect to the exchange and go, I'm going to send you $100 of this and I want $100 of that. It's
Hmm.
like being at the airport, having your, Canadian money, and I'm in America and I want to exchange Canadian for American. I'm at the window. Here's 100 Canadian. And they give me, well, today they might give me $50 American because our
Hmm.
value of our
Yeah.
dollars isn't so good.
I understand.
And that's exactly what a decentralized exchange is like. You connect your hot wallet to
Hmm.
this exchange, and then you swap, whatever asset you want for
Hmm.
another asset. But they
Hmm.
don't control anything. You control your wallet yourself.
Fantastic.
Does that
Thank you.
make sense?
Absolutely. The other thing, Daniel,
Okay.
I wanted to ask you is on the whole aspect of risk. Somehow, the impression that the average investor has is that there is a risk, a lot of risk associated with crypto. I'd love to get your perspective on how do investors determine first their own risk tolerance and how can they mitigate risks of volatility of crypto?
Excellent question. So crypto as a whole, if you look at its entirety,
Hmm.
is considered a high risk industry.
Right.
However, for me, education
Hmm.
is power.
Hmm.
Knowledge is power.
Yeah.
Walking into a casino and not knowing how to play any of the games
Yeah.
is very, very risky. Walking
Hmm.
into a casino and knowing how to play a game
Yeah.
is less risky because
Hmm.
you're familiar with the game. Now, even this, you don't have to be in a casino. You can sit at a poker game with your friends and be like, hey, it's a poker game, right? Is it risky or is it not risky? Well, the amount of risk is going to be involved with your understanding of what you're doing.
Hmm.
People who invest in the stock market who don't have any education,
Hmm.
that is, in my opinion, far more risky,
Hmm.
or in real estate. And any endeavor with no education is more risky than being highly educated in crypto. The
Hmm.
problem is people come into crypto, they hear that people are making all kinds of money, and wherever there's money to be made, there are what are called bad actors. And these are criminals who
Hmm.
infect and infest this industry to steal. So
Hmm.
I'm traveling and I know I have to be aware of where I go in different countries. And
Hmm.
if I'm not aware, I will end up in situations with bad people who want to take my money.
Hmm.
That's very normal, whether
Yep.
it's violently or whether it's by, shady or by hustling me. No different in crypto. You get into crypto. I've got
Hmm.
multiple long form videos on how to get robbed in crypto. I'm talking multiple, and the scams are elaborate. And they
Hmm.
are very, very, very entirely intelligent people who are
Hmm.
hiding in these spaces to connect with people new to the space to steal from them. So
Hmm.
it's very easy to get scammed, which gives it a very negative sort of connotation. It's also very high risk, high reward, some areas of crypto.
Hmm.
So the area I play in, which is if you look at this whole screen, is crypto, I pick this big of an area, this
Hmm.
little sliver, bull run investing. And bull run investing, to me personally, is the least riskiest
Hmm.
of the all crypto, and not only the least riskiest,
Hmm.
done properly, strategically, and intelligently, it's almost the most predictable.
Hmm.
And it's the most, like in my opinion, it's the most predictable way for a professional to come in or any person come in crypto to invest. But remember, when we invest in crypto, we're not coming in to take $1,000 and turn it into $10 million. That's
Mm.
not investing.
Yeah.
That's a whole somewhere else. I
Mm.
am taking a very strategic approach, and my clients are happy to double, triple, 5x their money in a year.
Mm. Mm.
Can't do that in very many spots to go in with 100,000 and come out with 500,000
Mm.
with within a year. It's very, very hard to do that in most industries. So we're going in with proper expectations. We're mature.
Mm.
We're not playing all kinds of, memes and high risk options. So the industry itself can be very scammy because there's bad actors. It can also be very risky because you don't know what you're doing. It's like sitting
Mm.
at a craps wheel,
Mm.
sitting at a poker game, sitting at and have no clue what the rules are, but you're
Mm.
throwing your money in very fast. And that's the
Mm.
problem. People, they move too fast in crypto. Fast is slow and slow is fast. When you
Mm.
get into crypto, move slowly. I don't care what avenue you go, whether it's
Mm.
bull run investing, whether you want to trade and do, this leverage trading that people do, and people get investing and trading confused all the time.
Mm.
People think crypto investing is trading, and trading is when they're longing an asset or shorting an asset the same way that they long the stock market and short the stock market. But
Yeah.
in crypto, they can apply 100 times leverage or even more. So it's very, very, very intense. They're different things. We're not trading, we're investing. So I picked a very big industry that has a very volatile world to it, filled with, incredibly bad people and incredibly good people, but a
Mm.
lot of new people who don't know what they're doing. And I try to pick a very, very small piece of it. I highly educate the clients, and they come in and strategically do well. But the entire industry itself, yes, any industry, especially crypto, if you're not educated, if you're not informed, and you're walking in blind, you're gonna lose your money. And I tell
Mm.
everybody, somebody
Absolutely.
asks you for your money in crypto, you'll never see it again.
Mm.
If somebody who does you don't know wants to be your friend, they're there to steal from you.
Mm.
Watch my videos, and they only scratch the surface of how many different schemes there are in crypto
Yeah.
to get robbed.
Absolutely. My next question, Daniel, is about the initial coin offerings. People are familiar with initial public offerings in the stock market or IPOs. I want to understand from you, what is an initial coin offering and what are the pros and cons of investing in an
So
ICO?
yeah, so previous bull runs, ICOs did very well because there were less assets, tokens, and coins hitting the market.
Mhm.
So, an initial coin offering would be something like, okay, there's for instance, a new project hitting. Let's just say it's an AI project, and we know AI is doing very well.
Yeah.
So it's a new AI project. We know the team, we know the developers. It looks really, really, really solid. So what they need to do, they need to raise money, just like an IPO. You get your seed investors who come in early. We invest for shares. And then when they do an initial coin offering, that's when it basically gets released to the public. And then generally the public buys it, it goes up. All the investors, if they want, they sell and make, all kinds of money. And that's generally the way an IPO works, just like in the stock market. However, in today's, like this past sort of like this year's of the ICOs, it's different. They're not performing nearly as well because the market is inundated with way, way, way too many projects, and
Mm.
most of the projects are complete garbage. So
Mm.
ICOs were very hot last cycle. This
Mm.
cycle, not as much. I mean, we
Got it.
got into yeah, a lot of investments of even good projects, but good
Mm.
projects, they get lost in a market where it's just flooded with project after project and
Mm.
bullshit hype and these people and celebrities, and everyone's talking this and everyone's talking that. It's just the problem with crypto is it looks sexy, looks like fast money. People get too excited. People, if you can believe, will follow a teenager on TikTok and throw
Mm.
thousands of dollars at what some person who is a teenager, and I don't mean that in a disrespectful
Yeah.
way. There's
Yeah.
many
Mm.
intelligent teenagers, but the majority of people, 99.9% of people in crypto, speaking about crypto, don't have a clue what they're talking about.
Yeah.
Only 0.1% actually are speaking the truth. Most of
Absolutely.
them are in it, and it's insanity. I've got people call
Mm.
me who've put
Mm.
10, 20, $30,000 behind something they heard at 2 o'clock in the morning
Yeah.
on a TikTok video.
I know.
It boggles my mind.
Right.
And more so, what these bad actors do is they give people these fake exchanges and these fake returns, and they can dangle this carrot of, oh, you're going to get rich, and then they show them, and there's so many elaborate schemes. So yeah, so the ICO, I'll come back to the ICO.
Thank you.
The ICO business right now is similar to the stock market, but it's just, if you can do well. But for the average person, it's unlikely they're going to get into an ICO
Mm,
that's going to do incredibly well
mm,
unless they're wired into crypto and really kind of understand it, or they're
mm.
close to somebody in the project.
Correct. Well said. So, time for one more question for you, Daniel.
Yes, sir.
We've spoken about investments, we've spoken about your bull run method, we've spoken about centralization and decentralization. I want to talk to you now about exit. I was often heard that either it is difficult to get out of a crypto investment or, it takes time. So I'd love to get your thoughts on what should beginners plan as their exit strategies and how liquid are crypto assets?
Okay, first of all, that's the best question ever, and I appreciate you asking it. I'm going to describe to you two separate exit strategies
Yeah.
so we both understand. One is physical, and the other is mental. The physical is easy, the mental is hard. I'm going to do the
Mm.
physical first.
Yep.
So, when I teach people how to get into crypto, I have a diagram. It starts off with you and your money, and wherever it is in your account on your Visa, how to
Mm.
move it on chain,
Mm.
right? How to move it into a centralized exchange to buy,
Mm.
how to sell, and then how to move it from your centralized exchange back into your bank account. It's a
Mm.
complete loop. So this loop, the setup process for me is incredibly important because it has to be seamless. So my clients can all seamlessly move their money from their bank account online and online off. So the physical setup, it has to be done first. Generally speaking, it depends on how you moved your money on. However you moved your money on, because I'm not, my program is, I can't just, there's many different ways, but however you move your money on, you should be able to exactly do the opposite to move it back into your account. And
Right.
if you can't, you have to stop and
Mm.
figure out how. Don't put money on if you can't seamlessly and easily move it back off. Now,
Mm.
that's the physical part.
Correct.
Believe it or not, even though that might seem hard, that's the easy part. It's the mental that's the
Mm.
hardest. So I have clients
Mm.
from previous who I haven't worked when I didn't work with them. I have one person, and I'm, can't really describe them too much, who put 50,000 into an asset where he knew his brother or brother-in-law was connected to the team. He wrote it to 1.4 million and
Wow.
wrote it down to 35,000.
Amazing.
Didn't take a penny.
Mm.
And this happens not just once, not to every single day. Ripple went from 50 cents to 250 last month. And instead of anybody selling, the second it hits 250, they go, "Oh, it's going to go to five. It's going to go to 10. Let me explain
Mm.
to you what happens." Then at 250, you're like, "I'm going to wait because it's going to go double from there." Then
Mm.
it goes to $2. And you're like, "Well, I didn't sell at 250. I am not going to sell at two. I'll wait till it goes to 250 and then sell." Then it goes to 150. Well, I didn't sell at two.
Mm.
150, it's going to recover. Then it's at a dollar. Then it's where you bought it, and then
Mm.
it's less. And this
Wow.
happens. Psychology of selling
Mm.
is incredible. I really put a big portion of my program towards the psychology of selling, just to give your clients a little bit of insight.
Mm. Mm.
After you do the physical part, all you win in crypto
Mm.
is you always take profit. You dollar cost average out. The second you're up two or three or four or five times, you take out 10, 20%. Then you take out another 10, 20%. Then you take
Mm.
out another, and don't worry about timing the bottom or timing the top.
Mm.
All you want to do is take profit when you're up and continually take profit. And don't worry if it keeps going higher. Take
Mm.
more profit. Nobody ever goes broke taking profit.
Correct.
However, people go broke riding the elevator up, getting overly excited at
Mm.
what could happen, and then riding it all the way down.
Mm. Well said.
I'll leave you there because I
Absolutely.
could talk more about, but that's the most I
Absolutely.
can.
But on
Yeah,
that
I
note,
can put it.
Daniel, I just want to say, I think what a powerful statement you've made at the end. One is the physical, the other is the mind. And I think the mind is where most investors tend to get greedy, tend to say either double my bet or, I think I've got news that is going to double next year, et cetera, et cetera. But thank you so much for speaking to me again with such passion and so much knowledge and experience about crypto. I think the last time I spoke to you, I learned many new things. Today, I learned even some things which are much more important from the perspective of actual investor. Thank you again for speaking with
Yes.
Daniel, and all the very best to you.
My pleasure. Thank you for having me again.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.